Hey Nevin, it's been a long time. How are you?
Yeah, doing well, doing well. How about yourself?
Doing pretty well. Let's see. I'm fine with my background. I would have had a little bit of a more professional, like Zoom type background, but I'm not sure how to. I've actually never used Google Meet, so I think this is
That's
fine though.
fine. No, that's
Yeah.
fine. I think yeah, the point is to give an authentic inside view in any case. I see you've plugged your brain directly into the internet with that headset. You're like fully remote, fully digital at this point.
I actually have. I just moved into this apartment, and I was trying to get a little bit of a podcast setup just because so much is by Zoom today. So I actually have a Yeti
Yeah.
microphone, but I then realized my computer actually doesn't have audio out. So for this chat, I generally this is what I'm usually if I'm on a podcast, I'm rocking a headset. So they're just
It
convenient for it's
no,
easy, good
totally.
audio quality. You know.
Yeah, yeah, and it's funny. I have a Yeti and I just tested it. That's why I held you up for a few minutes there, and it was kind of boomy and echoey. So I decided, you know what, we're just going with the basic headphones. But anyway, so it's good to see you again. What have you been up to?
Um, I mean, I think probably more similar to you than most people would think in the sense that obviously what we're doing is very different. But like for me, a lot of my time is basic entrepreneurship, basic company building, recruiting, management,
Yeah,
dealing with legal contracts, service providers, stuff that has nothing to do with whether it's building a protocol or running a hedge fund
yeah,
or
totally.
painful. And I think you and I are. I mean, I don't know you that well. I don't want to make assumptions, but I think you and I are a little similar in that we're both more into like abstract intellectuals than operational people. And
Yep,
so for
yep.
me, the biggest challenge by far of the last 5 years has been mundane corporate governance and recruiting, managing that kind of stuff has been much harder for me than
No,
being a
I
decent trader.
totally hear you. I totally hear you. And it's like you start a project and then it just sort of grows out of your control and you have no choice but to learn how to do all those different things and take on all those different responsibilities. Yeah, I relate 100%.
I was looking at my phone just because I wanted to have the bullet point list you provided up. So just give me 1 second, and then I would suggest that we can certainly talk about things ahead of time if you want to touch on further flesh out what you want to cover or not. But like the conversation we were just having, I think is perfect for
Yeah,
the content
totally,
that we want to
totally.
kind of be doing. So
Yeah, yeah. And so I mean my plan is just to publish this like basically from the beginning. So basically the thought is like just give people an inside view on what the conversations are like between me and our early supporters, the sorts of things we would normally talk about. Um, and and if there's anything that you want to ask about that doesn't seem fit to broadcast, go ahead and ask it and we can just cut that part out later. If there's
yep.
something that for some reason has to be confidential or whatever. Happy to catch up about any private matters as well. Um, but yeah, so yeah, and for context for anyone watching this, I sent Ari like a summary of like some things that we've been up to and topics that'd be cool to talk about because it's been a while since we caught up. But yeah, so feel free
Yeah.
to take it in whatever direction you find personally interesting. And if there's something that maybe you already know about, but you think that the audience would want to hear, then go ahead and share that too.
That all sounds great. Yeah, I think very unlikely that we'll have to edit from my end. And so, of course, feel free, and of course, feel free to just say no to a question. I've gotten used to that, being doing the podcast circuit, and just
Yep.
it's the most intense environment for that was like I was on like CNBC Fast Money, and it was like, all right, what were your returns this year? And I'm like, well, I'm not allowed to answer that for regulatory reasons. And they're like, but come on, like, was it better than this? Was it worse than that? I'm like, I cannot answer that. And just so I've gotten used to
Yeah.
being giving very firm no's,
Yep.
which
Yep.
I'm sure you'll have no trouble with. So on that, should we just jump in?
Yeah. Let's do it.
Great. Well, I think it does make sense to start like really simple and high level with reserve and just obviously I'm sure the reserve community many people will look at this, but also people who aren't at all familiar. You guys have been a little bit under the radar. Certainly, you personally have been just hard at work, head down. So
Yep.
why don't we start with, I think, just a really short intro to what Reserve is, what you guys are building and working on is a good starting place.
Yeah, absolutely. So the Reserve Project basically has the goal of making cryptocurrency into real money, both in the short term, making it available to people in parts of the world that actually need a currency alternative, and then our long-term objective is actually to produce a dollar alternative, like a true alternative to fiat currency. The project right now is really made of two parts. We have the protocol, which is our sort of like deeper tech layer, and then we have the consumer application. which is basically making it so that ordinary people can use a stablecoin for everyday transactions. And we've focused the delivery of that app so far on Venezuela, Argentina, Colombia, and the US actually, really just people in the US who are connected to people in those other countries, businesses mainly, and some individuals. And so yeah, so like, the thing that we've been focused on for the past year and a half, 2 years, has been really just the deployment of that app, the iteration on that product. And we've gotten to a point where it started to catch on. And so, yeah, that's kind of the high level summary of what we're doing and where we're at.
Great. I don't know if you can you share a couple of the numbers of that traction? You had mentioned that like they'd be embargoed for a while. Maybe at this point you could.
Yeah, totally. So at this point, we're at about 15,000 transactions per day are happening in the app. And that's about, last time I checked, it's about $1.6 million worth of volume per day happening in the app. And the number of active users, I think we're at about 38,000 people who are like what we determine to be an active customer, and that means that they've funded their account at least twice and they've done a transaction within the past 30 days. But a lot of those people come and transact in the app like every day.
Mhm.
And that's because, if you get paid in a volatile currency, like the Venezuelan bolivar, the Argentine peso, you want to convert it to dollars as soon as you can. And so it's a really frequent user behavior to come and convert money into digital dollars on a daily or weekly or biweekly basis, depending on how often you get paid. Some people do get paid on a daily basis because of the inflation, and then convert back when you want to spend. So yeah, those are some of the high level numbers. I guess the other number that we use to define our progress right now is the number of merchants that are accepting it. And we
Mhm.
just crossed 4,000 merchants accepting it, which is super cool. We've put in some BD effort to get that to happen, but we've also started to see a lot of organic growth in terms of merchants, just hundreds of new merchants accepting it on their own every week, which we're super excited about. I mean, that's we've been dreaming about that part for years now, so it's pretty cool.
Gotcha. Yeah. So fleshing that out. So you've got the kind of payment rail to merchant side, and then are most people using it? So it sounds like they're using it to quickly kind of get out of a plummeting currency into dollars in a very real time, kind of low friction way. Are
Mm-hmm.
you then? I'm assuming, and for anyone listening, I'm actually pretty out of the loop on the project. I've been trying to get back up to speed, but so I'm going to be asking some very basic questions that I genuinely don't know. So you're then on the back end with your banking relationships. Are you instantly converting those Venezuelan and other currencies into U.S. dollars?
Yeah, so the way that it works is, so at the center, like the balance that you have in the app is an RSV balance. And we sort of display that as USD because the current RSV token is one-to-one pegged with US dollars. And so if you want to make a deposit into the app, you're making a dollar purchase at the time of making that deposit if you're depositing with a different currency. So let's say you're depositing with Argentine pesos. What will happen is you tap and say, I want to make a deposit. You type in the number of dollars worth that you want to land in your account, and that tells you a number of Argentine pesos that you're going to have to send. And so then what you see is you end up seeing a screen that shows you, okay, send this many Argentine pesos to this bank account. And that
Mhm.
bank account isn't actually, it's not like Reserve Inc.'s bank account. What we do is we have basically a bunch of payment processors or liquidity providers in each country that we serve. And you get matched within a few seconds to one of those providers. And so then you have to then switch out of the app. This is like a little bit different from like Venmo or Cash App. You have to switch out of the app and go to your banking app and manually make a transaction to that bank account that you were given. And then as soon as that liquidity provider sort of sees that transaction, either via a bot or an API, or sometimes even via humans, sometimes these traders just have like desks of humans watching accounts to see these transactions come in, then they'll click a button in like the backend system of Reserve that they use, or that will happen automatically, and you'll get the RSV credited to your account. And so that whole process, for our fastest transaction types that happen the most frequently, can happen in under a minute. But sometimes it goes slower. If we have like a lot of transactions happening at once, that sometimes could take up to 10, maybe 20 minutes, especially if like something goes wrong in the transaction or whatever. But in any case, it's like, it's almost always under an hour. It's very quick compared to the arduous process of like organically going out and trying to find someone to like buy dollars from in a sort of informal forex way, which is kind of the default that we're competing against. So, and then you can do that same type of transaction in reverse. So if you want to make a withdrawal, basically what's happening is your RSV denominated dollar balance is going to a liquidity provider, and then they're making a transaction to bank account information that you've input in the app and like attached to your user account. And so that liquidity exists with Argentine pesos, Venezuelan bolivars, Colombian pesos, US dollars in the US, and we provide that part. And then also various cryptocurrencies. And then the last one is US dollars in the Panamanian banking system, which are kind of a little bit different from American US dollars. It's like a sort of different process that happens. So basically, people use it to get in and out from all those different payment methods. And then also obviously they can transact peer to peer. And so one thing that's actually pretty cool is, I forget the exact number, but it's around, I think, 18% or 20% of users that are signing up these days. They're getting their account funded, but they're not doing any fiat transactions in or out. They're just getting paid directly via Reserve, and then making a transaction, either withdrawing it to spend in their local currency, or just spending directly on with Reserve. So we're starting to see, even though it's a pretty small user base, 38,000 is not that many active users, we're already starting to see that interesting network form, and we're seeing the number of peer-to-peer transactions grow a lot faster than the total number of transactions is growing. So that's pretty cool.
Very cool. Okay, so you've built a useful service for people who are kind of failed by the traditional banking system. The Reserve protocol, I think you guys are launching in Q4. What does that enable? How does that complement the current
Yep.
product?
Yep, totally. So the simplest near-term effect that it will have is that we'll be able to offer kind of both a checking account and a savings account, if you will, because we'll be adding an additional stablecoin that is basically backed by what I call DeFi bearer assets. Basically, like the tokens that you get if you deposit a stablecoin into Compound or into Aave, or like an LP token on Curve or something. Basically, tokens that are like dollars but have yield sort of baked into them. We can aggregate those together into a basket and then create a simple currency where you don't have to understand the mechanics of any of those DeFi protocols, but you basically get whatever yield is coming through those tokens. And so basically for our users in the app, that will just mean that we'll start to be able to give them an option where you can get, somewhere between 1% and, I don't know, 7% or something, depending on market conditions. And, it'll fluctuate just like all the DeFi stuff does. So that's kind of the concrete thing. The development that I'm really excited about there is we decided to, for years, people would ask us, what's your plan for decentralized governance? And we've been sort of ornery about that, being like, we don't have a plan, and it's really hard, and we haven't figured it out yet. And so, don't expect us to do it anytime soon. And we finally decided to figure it out. So over the past couple of months, some of our like sort of protocol minds have been thinking deeply about decentralized governance. And it's still scary because there's still things, that we're just running a lot of experiments in our head, and there's like some things that we could get wrong, but I'm really excited about it. I think that we've come up with some like really innovative ideas for how to approach it that solve a bunch of the current problems. And so, so that's going to be part of this release. And so I guess, like, why is that even exciting? It's exciting because at the end of the day, the idea here is to have a currency that is, separate from any government, that is actually controlled in a decentralized way. And if you just have, a company managing a basket of tokens, well, then that company at scale ends up being subject to a lot of the weird pressures that a government would be subject to. And so I'm very excited about trying to make that step and de-risk that part of the project of actually governing it in a decentralized way. So that's a big part of this upcoming release.
That's something we can dive into a little more. So what kind of governance innovations? What are you excited about, or what are you experimenting with or thinking about?
Yeah. So okay. So one big problem with coin voting governance is that a lot of people, if they're small holders, don't really have an incentive to participate. because it just feels like their vote isn't going to matter. It's kind of like normal democracy for like anything other than, the biggest presidential election of the decade or something. And so we have come up with a system where what we do is we make it so that the individual coin holder, the individual R token holder, which is sort of the generic name for these basket stablecoins that the protocol enables, they can actually choose between sort of staying on the current path or migrating to a new path that has new properties for themselves. So they're making an individual decision that impacts whether or not that actually impacts their own financial future. And then that information can get aggregated about like, okay, what did people choose? Which is different from just asking people to vote where we're only going to do one or the other. Because in this case, what actually happens is a fork does get created and you actually can have this reality or this reality. So you can make a meaningful choice even as a small holder. And then there's another mechanism that we attach to that where basically the RSR stakers who are participating in that R token in an earlier stage of the governance process, they're able to essentially kind of make bets. It's a little bit like futarchy. If you're familiar with Robin Hanson's idea of futarchy, it's not
At a high
quite the
level.
same. Yeah, but essentially the way that it works on a high level is they can say, okay, I think that this proposal is actually going to get accepted by the supermajority or the majority of the actual R token holders. So I'm going to sort of cast my vote for it, or sort of my prediction that that will happen. And then if that does happen, then that staker ends up getting paid. They get a portion of a governance reward that is distributed to people who are participating in that step of the governance process. If that doesn't happen, then they actually lose some of the RSR tokens that they voted. So they're actually taking that risk. And so they're incentivized to think not about what do I want to happen, what do I want to vote for. They're incentivized to think about what are the individuals actually going to choose when they're given a choice, and then try to predict that. And what you might wonder, well, why would there even be this other step if the individuals are ultimately going to choose? The answer is that it helps guide the default action. So basically what happens is the stakers can make these sort of bets, and then depending on the information from that stage, there's a default of, are our token holders on this fork, or are they on this fork? And that's based on those predictions. But if there was like a malicious proposal that came through, even if the stakers were to get a bunch of people on that fork by default, people would have a very long time to migrate. And there's a pretty high probability that you could rally them and they would migrate, and then everyone who voted for that would get severely punished. So basically, so basically, mechanic number one is like making it so people can make an individual choice rather than just like voting for the collective. And the mechanic two is making it so that you sort of propagate that information backward in the process via like a prediction mechanism where you get paid if you're right and you get slashed if you're wrong. So that's not the entire governance process. There's a few other pieces that are part of it, but those are a couple innovations that I'm pretty excited about.
One piece that confuses me, or I'd love to clarify. So does this literally create forks within the protocol? And how does that create any problems, or how should, like, so I think a lot of people will hear that, or I hear it and think forks bad, or right, like breaks a lot of
Yep.
stuff, replay attacks, right? Like, how is this
Yep.
different?
Yeah. Okay, it's a really good question. There's a few different pieces that are probably worth talking about there. So one is that a fork in our case is pretty different from a fork on a layer one protocol, because in our case, we have this series of smart contracts that is holding external assets that have value apart from whatever our smart contract system says. Like it's holding, say USDC, for instance, as collateral. And so you can't just make a copy of that and then copy the USDC tokens. That would really not work. And so basically, when you're making a fork, you're making two versions of the protocol, but then they have to split the assets. And the assets end up getting split based on whether people choose one or the other side of that fork. Okay, so that's one thing to keep in mind about what I mean by a fork in the first place. The next thing is that we have thought about like, well, obviously we don't want to just like fracture the ecosystem over and over and over again. Like that could be damaging. And so the way that we're planning to handle this, and a few of these details could end up getting changed by the time of launch, because we're still like, running wargaming all this stuff to like make sure that there's no problems. But the way that we're planning to handle that is that these forks occur, and then depending on what people choose, Both forks continue to exist, but one of the forks continues to be governed and upgradable, and the other basically becomes static. Kind of in the way that like once a Uniswap LP pool is deployed, it's just static. That's
Mhm.
kind of the case for like one of the two forks for the R token. So it means that if you choose that, you'll have the properties of that R token. You'll have the
Mhm.
sort of financial sort of outcome that you chose for yourself, but it's unlikely that that fork will end up sort of having the network effect and being the main version of this R token over the course of time. So it's a little bit more like an off ramp than like a fork that's expected to necessarily live on forever. That's one piece. And then the other piece is that we have some logic where when those RSR stakers are making that prediction vote that I talked about to sort of like to help guide the crowd, that also determines which of the two is going to continue having the main contract address of the R token from before. And so that makes it so that for like an ordinary holder, as long as there isn't a really controversial proposal or something that's malicious, you just kind of stay on the default fork without even really having to think about it. And that continues to have the main contract address. And then there's kind of an off ramp every governance period for anyone who does dissent that's extremely easy for them to choose. But we think that that strikes a balance of basically giving people quite a lot of individual choice and individual control without fracturing the ecosystem. At least that's what we're hoping.
That's kind of interesting. Obviously, a common debate in crypto, really Bitcoiners versus everyone else, is around the value of static. Of how strong of a default should we have to be towards no change? And right, the
Mm-hmm,
Bitcoin community has basically said like, unless it's world ending, we don't want a hard fork. Right? Maybe we'll hard
mm-hmm,
fork to prevent a break of SHA-256 or quantum computing or whatever. But
right.
unless there's a critical problem, status quo. And then of course other protocols take the no, we've got to continue innovating, right? We've got to,
Mm-hmm,
I mean, Ethereum and the white paper, of course, plan to hard fork repeatedly, and other protocols. So this is like an interesting hybrid to me. That it's kind of like
mm-hmm.
you have the default of status quo. People need to proactively support a change, but easy to do so. Easy
Yep,
to that's an interesting kind of compromise conceptually, at least.
yep, yep.
Cool. And how let's see. Is how do you, rollouts are always really interesting to me in that right, we've seen them go very wrong where there's huge. So in your guys, well, I'll take a slight step back. So a really interesting thing about reserve, and at some point I hope we touch on, I believe effective altruism is something of interest to you.
Mm-hmm, yep,
I believe.
absolutely.
So at some point we can touch on that. But an interesting thing about reserve is that where most crypto projects target, frankly, the low-hanging fruit, the easy targets where you might only have 100 users, but they're each moving $20 million a day. So you get huge CVL, huge volume.
Mm-hmm,
Right, targeting a U.S. consumer or a crypto speculator is infinitely easier than you need 20,000 Venezuelans to hit the same economic impact if you're targeting financial gain. But here, you're actually trying to build something that is useful and helpful to people who need it most. So sorry, that was a tangent. We've seen protocols that launch that on day one have $100 million of TVL and then get hacked or there's a bug or there's a problem. And then a lot of people will say, oh, well, they should have built up slowly, right? Because there's just often Bitcoin had critical bugs in the very beginning, as
mm-hmm,
did almost every protocol. And
mm-hmm.
so with complex rollout, you have like Polkadot that did their Kusama kind of pseudo testnet, or at least that's the way it was pitched first. How do you think about that with the rollout of a complex novel governance mechanism? Are there any kind of training wheels?
Yeah, it's a good question. We were just talking about this the other day, and part of the challenge is that like you don't really get a test until there is significant value in the real world because that's what gives the incentive to all those smart anonymous people to come try to attack you. So, one heuristic we've sort of had in mind is like, it's like if it's proven to be safe at like X amount of total value locked, then that's like a good chance that like it's probably okay at 2x, but maybe
Mm-hmm.
you only want to like 2x at a time, by like lifting the limit essentially. And so like on the existing RSV token, we've done that where we've lifted the limit over the course of time. And so I think that we'll probably do something similar here. And I think at the very beginning, I'm not, who knows like how much demand there will be for this new R token at the very beginning. But we plan to put a bit of our own capital in it. Essentially, like this is another thing is that we've kind of built this product in part for ourselves. And I guess it would require explaining another facet of the product to say why that is. Where basically, a year ago or so, we looked into, okay, should we take a bunch of our US dollar capital for the project and put it into these lending protocols in order to get some extra yield. And we had a team member do some research on them, and they decided, you know what, like with the risk of something blowing up with like a liquidity crisis or with a smart contract bug, it's just too risky for us as a project. Like we have to be very careful about our treasury. And so another piece of this protocol design that we haven't talked about yet is that it actually adds a layer of insurance where RSR holders can stake their tokens, they can earn a portion of that income, and in exchange, in the case of a default, they end up being the ones who have to cover that up to the amount of value of RSR that's staked, which might not be 100%, but it'll be pretty significant. And so it's actually something that we will feel comfortable finally taking our capital and putting it there instead of just keeping it in cash. And so I plan to put, not a huge amount, but at least some in at the very beginning as like essentially a live bug bounty where it's like, okay, you can come steal, some number of millions of our dollars if there's a bug here. And then probably from there, some progressive raising of the limit of how many R tokens can exist, as we get more confident over time. The other thing, of course, is, auditing, of course, so we'll do an audit before launch, and then we have another audit scheduled for what we think is going to be a month or two after launch, just to basically do that test as thoroughly as we can.
What does the world look like, and what is Reserve's place in it in, say, 5 years?
Yeah, that's a good question. Well, I really do think that we're at a point where pretty soon the world is going to have to acknowledge that crypto as money is useful to a lot of people. It's actually, it's been a long time since the invention of Bitcoin, and we really haven't proven as an industry that crypto as money is actually important to people. And I think that, obviously this is like sort of my biased view because this is the thing that I'm working on or whatever. But it's like this is the main thing I'm qualified to comment on. I'm sure there's all sorts of other cool stuff that's going to happen. But like, I think that when you see that people are able to use cryptocurrency to basically live a stable and dignified life and to a degree that would have been pretty difficult otherwise, it's just really hard to deny that. It's like, okay, this sort of has been a vision in crypto for a long time. Many have tried. There've been various issues encountered, but it's like the thing is getting sorted out. And so if you in 5 years, if we're at a point where tens of millions, maybe hundreds of millions of people have their main account in a stablecoin, and not just because like the fees were a little bit lower or something, but because they just really didn't have a good alternative other than that. I think at that point, it's going to change the political nature of the situation, because it's going to make it so that like, okay, you just can't deny that for all of these individuals, their well-being actually depends on us allowing this sort of system. And I think there is a big question about, what are governments going to push back on and what are they going to allow? And so one of the things that we're going to try to do as a project is show this type of value to, to people who are in positions of power, to just make it clear that it's like, look, you can make whatever rule decisions you want, but you have to acknowledge this very direct impact on people's individual lives. So in 5 years, I think that not only Reserve, I think at that point, there'll be many different projects that are effectively serving people, basically making crypto useful as ordinary money for people in countries with currency issues, with high inflation, with capital controls, with people who are sort of blacklisted by the global banking system for one reason or another. And to be clear, it's like I'm not here to enable criminals. I want criminals to not commit crimes as well. But there's a lot of collateral damage that occurs, and so I think crypto actually is a really useful tool for a lot of law-abiding people. I think a bigger like wildcard question is, are we actually going to start to see anyone really actually looking to crypto as an alternative to the US dollar? People like to talk in crypto about how Bitcoin is the alternative and so on and so forth, but it's not. Like right now, even people who complain about inflation being high, their checking account at least is in cash, and probably their savings account. Um, and um, and so, but there's a question about over 5 years, maybe 10 years, maybe we do start to see significant changes to the value of the dollar, and maybe we actually start to see a movement of people who, maybe even people who today are anti-crypto, starting to be like, huh, that's interesting. That dollar alternative cryptocurrency over there, that's like backed by various assets or whatever, maybe it's something we do, maybe it's something somebody else does. That's starting to look a little bit more interesting to me. I think you could end up having, like actually a very different narrative and a very different type of energy in the cryptocurrency space than we've ever really felt before. And then the last thing I'll mention, this is even more like just sort of speculative, but I have to wonder if like as the migration from WhatsApp to Signal happened, which totally blew me away. Like I just did not see that coming. I did not see ordinary consumers being worried about their text messages being encrypted. I started to wonder, like, could the same thing happen with money? Could people actually be interested in moving from, Venmo or Cash App or Bank of America or whatever to a cryptocurrency, not because of it being a different currency, but because of it being a different custody mechanism? Actually caring about holding their own money, maybe even actually caring about fully private transactions. If you had a fully private stablecoin, it could be that there's a tide in society that would be pretty excited about that in a way that, maybe it doesn't quite feel real to me right now. It doesn't quite feel like people care about it enough, but I was really surprised that they cared about their text messages enough to switch to Signal. And so it has made me wonder, maybe even in places like the US and places where you classically don't worry about your money at all, maybe people could end up getting interested in crypto in a broad tide because of the the liberty and the privacy elements of it.
Your approach to reserve, I think, it fits that thesis well. And I'll clarify. So my thinking around consumer behavior is very simple, which is people, unfortunately, will basically always pick the lower friction option, even when it's a fairly small amount of friction, except for kind of call it the 5% of people who really, really need it, where they're going to get put in jail without it. So it's tough to bridge that. So like the Chinese firewall is deliberately porous. Anyone, basically, you spend $2 a month, you VPN, and the average Chinese person knows that, and the average Chinese person doesn't use VPNs day to day because they don't want to add a half second of latency to their searches. Like browsing the internet with an extra half second of latency is enough friction that the average person says, I would rather my stuff not be fully censored, not be censored and exposed, but half a second. And so I think a big part of it is UX is so important. The product is so important, and having a product that doesn't feel like a sacrifice. So, I had a lot of debates. This was maybe, 6 months ago, when the whole, particularly crypto Twitter, but the world was up in arms around social media censorship around President Trump. And a lot of crypto people surprised me. I found myself on the opposite end of people who I'm very ideologically aligned with around privacy and anonymity. And what was interesting to me was all of these people were talking about how terrible Twitter is and how everyone should get off Twitter. And of course, they were talking about that on Twitter and spending 90% of their time on Twitter. And alternatives do exist. So I actually deactivated my Twitter account for, I think, 2 to 3 weeks around that time, partly to force myself to explore the alternatives. I wanted to get a genuine sense of Mastodon, and I knew I wouldn't do that if I had Twitter, because Twitter was just so convenient. So I created accounts on like the 5 decentralized social media accounts, and a lot of them clone Twitter. Like, they look and feel pretty similar. Obviously, they don't quite have the network effects, but like I found, the UX wasn't quite as nice. It wasn't quite as pleasant an experience, and that matters so much. That basically, even these people who are full-time crypto, who are so passionate, right? They're for 4 hours a day. They're railing against Twitter on Twitter. Still, for them, a slightly worse user experience wasn't enough for them to actually follow their idealism and spend their time on a decentralized alternative like Mastodon that has decent crypto network effects. Especially among the Bitcoiner community. There's a lot of the hardcore Bitcoiners on some of the groups there. So your approach with Reserve of kind of building a product and worrying about the decentralization a little bit later, but first making sure this is something people get value from and want to use, I think makes a lot of sense. That a lot of the projects that go the opposite way, they have success because they're not targeting consumers. They're targeting a tiny group of crypto native hobbyist experimenters. and
Hmm.
they don't grow beyond that. They don't. I
Hmm.
mean, for example, like who's going to use MetaMask today? And so the answer we're fine. The projects that are achieving growth where MetaMask is required are appealing to a 15 to 25-year-old demographic, really young people that are willing to experiment with new tech. But
Hmm.
for example, I'm very excited about crypto gaming as something that can help take crypto mainstream more generally. And you're not going to get frankly, I'll use myself as an example. Like I would never have played a game that required MetaMask if I wasn't already a MetaMask user. That
Hmm.
amount of friction for me at my in my old age is already too much. Like I just don't
Hmm.
have the time and the bandwidth to be playing around with very
Right.
janky UXs. Yeah, I think so I've always been really optimistic about NFTs and gaming as things that could help bridge that gap. And in your case, it Reserve focused on um, I was going to say remittances, but that's obviously not the use case. That's a tiny, tiny fraction of it. So I'm curious. What's the one sentence as to how
Well,
should I describe Reserve as it is today?
it's funny you should say that because there was a phase of the project where we were hunting for like, what's the main use case? What's the killer use case that's going to cause us to get big? And I always kind of wondered about that. I was like, well, it's just a financial account. People use those for all sorts of different things. And lo and behold, like that's true. Like we try to figure out what our users are doing, and they're doing so many different things. It's like hard to keep track of. But like if I tried to boil it down, let's try to boil it down. It's like, I mean, the way that I think about it abstractly is like what we're offering is basically a replacement to your bank account. So it just is something you can use for ordinary everyday transactions. But it's an app. It's a new technology. Has a QR code ability to pay, so you can pay at a merchant directly with it more easily than making a bank transfer. Although people in Venezuela, for instance, often do have to make manual bank transfers to pay for things. Um, and then in terms of what people are doing with it, like I said, it's common to trade into the dollars once you've gotten paid to have like a stable savings, even for a period of a week, in the case of Venezuela, or maybe a period of like a month in the case of Argentina. We also have seen a lot of businesses using it for their treasury management.
Mm.
There's some cases where they're saving the money in the reserve system, but right now I think our platform, honestly, I don't think it's secure enough to store a large amount of money as a business and really feel safe about it. And so it's often used as
Good
like a
for you
channel.
for saying that. So that for people not familiar with you in Reserve, I don't think I've ever heard a project founder or lead say that ever. Actually, rare except I don't know if it was ever the lead. I mean, you had people like Vlad of Ethereum saying things like that, but that's incredibly refreshing honesty. So sorry to
Yeah,
interrupt.
I mean, yeah, no, I mean, we have to keep track of the reality so that we can fix the problem. So, but yeah, so basically, businesses are often using it. They convert their money into the stablecoin, and then they pretty quickly, like within the day, make a withdrawal to an American bank account where they'd already set up an LLC in the States and so on. It's very common for businesses in Latin America to have an American counterpart and bank account so that they can store their money in US dollars in the ordinary banking system. So we see a lot of flow going through there. Like more than half of our total transaction volume is business users, even though they're a tiny fraction of the total number of users, because of
Yeah,
that need for that channel for treasury management purposes.
interesting.
Mm-hmm.
I feel like I have to ask how do you guys see yourselves and I get this question can be answered a lot of ways commercially, idealistically, or thematically, reserve versus others versus stablecoin issuers. And so it could be yeah, broad question, interpret however you want, but both yeah, you have both the algorithmic decentralized stablecoins, the fully collateralized increasing hybrid models like MakerDAO is in the process of incorporating real world securities as collateral. How do you guys think about the stablecoins you're offering in that context?
Yeah. Um, so I guess the way I think about it is that it's a like the reserve protocol can be thought of as a technology for taking those centralized asset-backed tokens and aggregating them together in a fully decentralized way, um, which actually makes it so that it makes the crypto space less dependent on any one issuer, in my opinion. Or at least it will if the main reserve tokens end up with a lot of circulation and a lot of network effects. Because what it means is that if, say, not to pick on one or the other, but I'll just say, what if USDC gets shut down or they
Mhm.
get, heavily regulated such that you have to be on a whitelist of KYC in order to use it or something like that. Um, well, then that token can basically be removed from the basket and replaced with other stablecoins of equivalent value. Obviously, if all of them were to have that outcome all at once, then that would be a problem, right? Then we would be forced to switch to collateral that is either algorithmic stablecoins or something that's not pegged to the U.S. dollar, that's backed by gold or other things like that. That'd be a degradation in service. But as long as you have asset-backed tokens of whatever variety you're interested in issued from somewhere in the world at any point in time, then you can have a continuous stablecoin where for the end user, they don't really have to think about that complexity. So basically, you can imagine a world where over the next 5 years, US issuers start to have problems and they start issuing from Hong Kong and Switzerland and Singapore and other places. And as long as there's an overlap in all of that, the reserve token that's just pegged to those dollar stablecoins, for instance, will just continue to act exactly the same. And so it doesn't, as a technology, it doesn't directly make those underlying tokens harder to shut down, but it makes it so that the overall phenomenon for the crypto space is sort of harder to push back against. And if you think about it game theoretically, it actually makes it less useful to go after and try to shut down any individual issuer if you actually have this system that can sort of hop from one to the other, where it makes it so that as a regulator, you can't come in and destroy the network effects and the liquidity and so on if the token that everyone's holding sort of is impossible for any one regulator to attack. That was sort of framed in like an anti-government, anti-regulation way. It's not that I'm fully opposed to regulation. I think that regulation can be pretty healthy for a lot of stuff in crypto, but there's something pretty magical about the fact that you can't shut Bitcoin off. Where I heard stories from like early at Coinbase where regulators came to them and said, we really don't like this Bitcoin thing. We're going to need you to turn it off now. And they had to explain, like, that's not how it works. We don't have the ability to do that. And so I think getting to that same point with stablecoins, which we're not really at yet, unless you trust the algorithmic stablecoins, which I personally don't, that's part of the goal of the protocol. So if it really succeeds, we'll sort of feel the same about our stablecoin the way we do about our Bitcoin.
Gotcha. Yeah, I actually don't really have I almost don't have an opinion on how things play out. It'll be, I think my view is just consensus on this. We're going to see a lot of real world securities being put into stable coins. There'll be some pitfalls around that. I don't know how that will play out long term. Obviously, there's local, basically almost every inch of the world is controlled by some government, almost every inch. And so to some degree, it's ultimately local police that enforce your right to your house, right? Or a piece of gold, or ultimately it's local legal jurisdictions. And so how does that kind of roll up, and can we get a sufficient diversification to, like, maybe there's in theory exposure to trusted third-party regulators and legislators, but if it's sufficiently diversified globally, does that work? Or maybe it's a fast-moving target. Maybe it's projects like Reserve kind of constantly rationally re-underwriting the regulator and legal risk of the securitized assets feeding into the basket. I don't know. It'll be interesting to see.
Yeah. So you're talking about stablecoins backed by securities in the sense of like considered securities in the U.S. Is that right?
I mean it very. So I think I'm using the jargon correctly. I believe that any real world asset that you are able to put into a stablecoin as collateral becomes a security. The process of doing it. So if you have a commodity, if you have a bar of gold, and I believe it becomes a secure. Not that this matters, but just the SEC would claim jurisdiction over a bar of gold collateralizing a stablecoin, even though they have no legal jurisdiction over gold.
It's interesting. I've been wondering about this because Pax Gold is traded on U.S. exchanges like I think Gemini and Kraken, for instance. And I think that they're considering it to not be a security. Maybe there'll be some pushback on that. But I had started with the interpretation you just shared, and then I saw that example in the wild, and I was like, that's interesting. I wonder what the legal argument is there.
I'm ignorant of, I've heard of Pax Gold, but I don't know. Maybe they've come up with a clever workaround. Maybe they just have lawyer opinions. Maybe they're just going to be happy to fight. I don't know. I don't want to make a false claim.
We'll see.
Cool. Well, let's circle back to the start of the conversation. We were commiserating a little bit over, you're a protocol founder. I'm an investment firm founder, and yet so much of our day to day is really just a much more mundane, not crypto related running a business, which is influenced. We talked about you had mentioned in a private communication the challenge of hiring for some roles as being something which takes a lot of time. I mean, obviously, crypto talent is incredibly high demand, and frankly, there just isn't that much of it, and it's hard to vet because there was the joke there was like a job listing 5 years ago where someone said like 10 years of crypto experience requested for like a JP Morgan crypto analyst, and it's so there are, I mean, like if I'm trying to hire a DeFi expert, it may be that that's someone who's only been in the industry for 12 months, right? And that might be one of the savviest person on DeFi in the world. So yeah, well, actually, I'll share my experience very briefly, and then please, curious about your guys. Yeah, so for us, hiring for investment talent is incredibly difficult because it's not just people who are good, but people who've shown that they're good. And in investing and trading, showing that you're good means making a lot of money. And if someone's made a lot of money, they're harder to hire. And people in crypto tend to not be quite as greedy as Wall Streeters. So like if a Wall Streeter made 20 million, they still want $1 billion. You can still hire them. They're still, whereas there are a lot of like Ethereum devs who made $5 million as a 24-year-old, and they're like, that's more money than I ever expected to make in my life. I'm no longer money motivated, right? And I've talked to some of these people, and I'm like, why? And I'm like, why don't you do this? You could probably triple your money. And they're like, because all right, I don't care. What's the difference between 5 and 15 million bucks? Like I'm doing what I love. I'm working on projects I care about. I don't want to trade. I don't want to speculate. I don't want to hack. I want to, I'm taking care of my money, right? So the problem is it's hard. I can't hire that person then because if the role I'm offering them isn't exactly what they want to do, right? If there's any bureaucracy or administrative, if they ever have to say, well, my boss Ari's a jerk and I have to listen to him, like, right, which I respect, like, great, like you have all the money you need, do what you love. So for us, it's a really tough challenge. The people who've shown themselves to be great investors and traders in crypto are generally too wealthy to hire, or they're running their own fund, or they're running their own capital. And there's almost no economies of scale in crypto. And what that means is that if someone has a couple million bucks of their own and they can get exchange leverage, they can probably make more money themselves than trading a much bigger pile of money for us because our investors keep most of our gains. So I won't spend much time on this, but basically like the hedge fund model is very typically 2 and 20. What that means is of the upside, the investors keep 80%, the managers get 20. And of that 20, I then have to divvy that up across a team, right? So if a trader made a chunk of money, the most I can give him of what he made is something like 10%. And that's not because I'm being, penurious. Even if I keep nothing, maybe I can give 12% because I have marketing, I have ops, I have legal. So that person is going to keep 10% at best of what they made for our investors, or they keep 100% of what they make for themselves. In traditional finance, it works because so much of trading requires massive economies of scale, right? If you're doing a corporate bond, if you're a corporate bond investor, you basically need $1 billion balance sheet. Whereas in crypto, there really aren't economies of scale. It's easier for the trader, like the bigger you are, the more slippage you have, the harder it is to get fills, So for us, that's the pain point. Very hard to vet and recruit and retain investment and trading talent. Whereas most other roles are fairly straightforward. Ops and accounting and legal we kind of can draw on the traditional pool of professionals. And at this point, crypto is established enough and we're established enough that it's not viewed as like, you're crazy to join a firm like ours, I imagine same, like you guys are very well capitalized at this point. You have a good community. So, I assume if you pay well, you can get talent. So yeah, I'm curious, what are the biggest kind of HR pain points for you?
I just have a couple follow-up questions there because this is interesting to me. So the trader who's trading their own capital, so it's like they would need, I guess the question is, if they're trading like BlockTower's capital, are they going to have access to 10x more or something? If they have access to like 20x more, then they would be making more per smart trade that they make. Is that right? If they keep 10%,
yes,
and it's 20x. But then you said if they can get leverage, then maybe they don't need that. They can do it on their own. But then in that case, it seems like they would have a lot more downside. Like if they're trading the fund's capital, they have reputational downside, but they're not just going to get like liquidated if they make a terrible trade with leverage, right?
Very astute. So my pitch to people is often around the downside mitigation. And the problem though is, of course, every good crypto trader is super confident they're going to be a billionaire, right? That no one's going to fail, no one's going to blow up. There's never a bad trade, right? So, but a big part of the pitch is, look, you may run bad for a while, and if you're trading with aggressive leverage, or even not, if you're just trading even unlevered but aggressively, you might have a bad 6-month period where you lose half your capital or worse. And if you don't have income coming in, that's brutal. Like, so, like to at the same time, and you tend to, like, speaking as basically a career trader, when everyone goes through rough patches that shake your confidence in yourself, not to mention your whatever trading account it is you're trading.
Mm-hmm.
And at that point, when you've traded badly, you might also fear for your job. But if you've also at the same time lost half or 3/4 of your life savings and you have no income coming in the door, all of that together makes it is so
Yeah.
much worse, so much worse.
Yeah.
So often my pitch to people is, you get to be part of a team, and there both that can make you a better trader, but also maybe you want that, right? You don't want to be sitting in your mom's basement or your mansion, whatever, trading alone. You want to feel part of a community, part of a team. Hopefully we can make you a better trader by giving you access to just networks, relationships, tools, all of that, and of course the camaraderie, right? We share ideas. But yeah, so your math is right. But what makes it worse is that not only are there not economies of scale, there's diseconomies of scale. So I mentioned slippage.
Right.
So as a really concrete example, like, right, let's say you have $1 million and you see a great opportunity to buy an NFT or buy some small cap and get 100K, and you can triple your money. Well, you can't 20x that bet size, right? It's a $20 million protocol. You can't buy. Not only can you not buy $20 million worth, if you buy $1 million, you're going to move the price yourself 20%. So, and we face this all the time, where we'll see an amazing instant 2x opportunity, and we'll make 100 grand on it. And for you or me, 100 grand's great, right? But in the context of let's hypothetically $500 million portfolio, it's not. It's nothing.
Right.
So yeah, so that's a difference between crypto and many traditional markets that not every traditional market. Like, there are people who will say trade S&P 500 futures personally, and you don't really need leverage or scale to do that. But most things in traditional trading, like my first job, I was an options market maker at Susquehanna International Group, and you can't do that on your own. I mean, to do it, like, there are small teams that do it who have a $50 million balance sheet, and they've invested $1 million in good infrastructure and tooling, and they have an IT person, but that's really a firm kind of business. You really can't.
Mm-hmm.
There's huge synergies to having that natural diversification of having. Let me put it this way: like, if you're one trader only trading, say, Bitcoin up and down, there are going to be periods where trading just stinks, and it can be really valuable to be part of a firm where one person's doing Bitcoin, one person's doing gold, one other's doing S&P 500 options. And so when you're having a good month or good year, maybe someone else isn't, and so there's that natural diversification that adds a lot of stability. So, okay, enough about me. Please.
Yeah, no, that makes sense. But yeah, and so it seems like maybe even though it's tough at this scale, if the space keeps growing, you'll end up benefiting from having done that hard work and built the thing early on. And so maybe that scale argument will apply 8 years from now or 10 years from now.
I think eventually it will, and we're starting to see that, by the way. We're, for the first time ever, really, like, obviously there were returns to technology from the very beginning. You had arbitrageurs, we didn't pursue that. We just, there's a lot of ways to make money in markets, and we said we're not. I've never managed teams of developers. I didn't want to, and so we focused on things that didn't require tech. We didn't. Earlier in my career, I competed against the likes of Rentech on ultra high frequency bond trading, where I and many other people paid to install microwave towers on a building in Chicago to shave literally microseconds off of messages between Chicago and New York for a particular bond relative value trade. And we literally were measuring microseconds. And that is miserable and horrible. But of course, people have made billions of dollars doing it. That's not a business I ever want to compete in. It's not my skill set. I was frankly miserable doing it, because I was like, basically I would have to just trust the devs, and I didn't know what was going on. And when we weren't getting the speed we wanted, like, what do I know?
So I will answer your question about recruiting, but that does remind me, there's something I've been meaning to ask, which is, do you know anybody who is doing sandwich attacks on Ethereum that's doing like MEV attacks in order to make money on those like Uniswap type trades where you're familiar with what I mean by that, right?
Yes. Yeah, I've been catching up on Mev. I'm definitely more amateurish than some of the people listening to this, but I am familiar with the terminology and have chatted with some of the Flashbots founders. And yes, I know some of the people doing it. I'm not close with many. Most are 1 to 3 person groups, so either individuals or small teams, and it's not scalable. So we've looked at this as BlockTower. Is this something we should be doing? And not specific type. I mean, we just looked at it broadly, right? Like, what is the opportunity set? And certainly there are things we won't do for ethical reasons or legal reasons, but the first is just, what is the opportunity set?
Yep.
And our conclusion was it's actually too small for us in the sense that I don't have a great estimate of the total amount that those traders are taking out of it, but my rough guess right now is it's running at around $100 million per year as a run rate right now. Um, that's not total MEV. So miners are capturing more, right? There's a lot of money that people are losing, but a lot of it is going to miners that,
I
you know,
see.
we're not going to extract. So
Yeah.
how much money can traders extract? I think the total is something like 100 million right now. And so if you're really good, maybe you can get a third of that, you know? And that's actually not that much money. Like, I mean, that's obviously a
Right.
lot,
Right.
and for those small teams, it's great. But for us to basically, we decided it was an area that it doesn't make sense for us to try to compete against those young and brilliant people running it themselves. In
I
3
see.
years, maybe that's multi-billion, and maybe we have a team doing it.
Yeah. I asked because it's something that we've been thinking about as we've been designing this new protocol, because the protocol at certain times does automated rebalancing, and so it's trading, in those decentralized DEX pools, and potentially subject to basically just bleeding capital through these types of attacks. Which, from my perspective, is like super annoying. I'm like, damn it, I'm like annoyed by the people doing that. But at the same time, I totally understand responding to that incentive. I even thought about, well, should we hire someone and have a team to do it ourselves so that we understand it, so that we can try to build our protocol to be as robust against it as possible. But that's just a whole sidetrack that we'd rather avoid doing. But I brought it up because
Hmm.
if there is anyone who'd be down to talk to us and like
Yeah.
help us war game. I mean, it's a little weird because they're making money on the thing and they like in theory want our protocol to be vulnerable. But if they're a friendly
No,
person,
no.
maybe they'd be down to talk to us about it.
It's amazing how uncommercial many people are. So I actually I after this I will connect you with one of my colleagues, an analyst, Vikram, who's on my team, who was doing at least stuff like this 2 years ago before he joined us. He's probably the most expert person at BlockTower on like real Ethereum on-chain deep dive. We have a couple people who are
Cool.
very good. I'm not. I'm ignorant, but yeah, I'm happy to connect you. He's very savvy on it. He better not be currently running it without me knowing, like for his personal account. Although realistically, I probably wouldn't and couldn't know. In that, if he's savvy about covering his tracks, I probably couldn't know. Which is a whole like compliance is an issue for us, and you're supposed to run a very tight trading, basically a trading compliance program where the firm is supposed to know every trade anyone on the team
Mm-hmm.
does and report it
Mm-hmm.
to the SEC.
Mm-hmm.
And the problem in crypto, of course, is like literally what they ask for, what our compliance person asked for, are things like brokerage statements. And you do something on a DEX, what's the
Yeah.
it's really voluntary. So I trust my team a lot. I think I have a very ethical team. But the reality is, there's some things there's no way for me to police.
Mm-hmm.
So yeah, I'll connect
Yeah.
you. There is a lot of work going on around trying to mitigate it. So like
Mm-hmm.
Flashbots is fascinating to me in that you had it's like weirdly altruistic in the sense that it was founded by at least some of the people were actively doing this, and part of, at least I believe them when they say this. So I don't maybe I'm wrong, but this is what they say, and I believe them, that they did it really to democratize it and bring it out into the open, with the thinking that, and there were a lot of people. It was like 40 people who ended up kind of joining in form of Flashbots, and some of the, I'm sure there's very diverse interests and goals, but for a lot of them, it seems like their view was, we actually want Ethereum to succeed. We don't like this. So it's a little bit like they were playing the games as hobbyists. They were doing it more out of interest than really for profit. Some of them were certainly making money and happy they were, but they got together and said, let's publish this, let's publicize it, for two reasons.
Yeah.
One, to level the playing field, and two, to encourage the Ethereum community to fix it.
Mm-hmm.
And there's no quick and easy perfect fix, but there are a lot of, I'm not an expert on this, but I did spend some time trying to get the basics. And, so some of the layer twos like Arbitrum do mitigate it. You have other chains like Solana that try to deal with it using things like VDFs, verifiable delay functions, which is also not a perfect fix, but may help somewhat. We don't know quite how much it could help. And there's a lot of other ways to mitigate it. So, and the ultimate is probably to shield the mempool, to have something like ZK rollup so that every
Mm-hmm.
transaction is
Right.
completely, basically, the way to perfectly fix it is miners can't see transactions.
Right. Right.
That, as far as I know, no one is close to implementing that today,
Yeah.
to my knowledge.
Yeah.
But it is doable. Like we know the cryptography.
Huh. Huh. Yeah. That's interesting. Yeah, I guess it could
This is
increase the
something you could
expense of,
this is something you could address later on and learn from what everyone else is doing in the industry, in
yeah,
the sense that you could have, like, I don't know that you need to fix this at the layer one level. Like, one version of it would be that in 3 years or 5 years, you launch a layer two and basically migrate almost everything to it. And that fixes this issue. And then you just have that. Like, it could be a roll up chain. There's a lot of
yeah,
ways that you could fix this after the fact without having to revamp the reserve protocol, I think.
yep, yep, yep. Cool. Yeah, we'll be interested to, probably Taylor and our team will be interested to have a conversation about that. Um,
Certainly.
so okay, but so yeah, so you've been pointing to the area of recruiting, and I really agree about, the difficulty of, we've had that problem too. There's like some types of people we'd want to recruit, but they've already made tons of money, and if they haven't gotten to that stage yet, how do you pick them out? Um, and I don't think that we've really perfected this yet, but the direction that I've been going, to try to solve that problem, and we'll see how this pans out over the next 6 to 12 months, is, and this is going to sound like really sort of simple and like maybe straightforward, but it's actually really hard, like at least for me to do, and I think for people generally to do, is like to really be actually kind of brutally honest about what kind of person would be good at doing the activity, and then
Hmm.
getting to know people who don't have a track record and trying to pick out the ones who are actually going to be kick ass at it even though they haven't done it before. Where the trouble with that is, like, when you're having a conversation with somebody who you don't know yet and you're getting to know them in an interview context, it's very natural to try to have the narrative of like, you're great, I like you, this is going well, etc. And it's like, I think as humans, we almost do that inside our own beliefs in the moment. We're sort of trying to like actually believe that, not just, not sort of privately think, well, blah, 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 but then publicly pretend like it's going well. And so there's a challenge of like, how do you spend time? And it could be as little as, maybe half an hour in a first conversation, maybe 3 or 6 hours in total conversations if someone gets further in an interview process, and actually like really truly honestly evaluate like what kind of person is this and are they actually going to be good at this thing. It's almost like a social challenge to do that more than like a technical challenge. And so I've been working on, for myself, just like, asking uncomfortable questions that actually probe and sort of figure out how people think, and actually also reminding myself consciously when I'm in even a half hour or 1 hour conversation with someone, like, okay, the way this person is right now, like, keep in mind that's how they're going to be like forever if they're on the team. I mean, they might change a little bit, but it's like, whatever you're seeing now, like, you can't just optimistically be like, oh, they did and said those few weird things, but I'm sure they'll never do anything like that again, which is kind of like a natural impulse. You have to be like, okay, no, whatever it is, good or bad, it's like that's what you're going to get. And I personally I'm sort of hypothesizing right now in our hiring process that if we do that and we really take it seriously, it actually does allow you to pick out talent that, not via track record, but via personality, which I think, yeah, for those social reasons, at least for me, has been a difficult thing to do. So that's the direction that I'm currently bullish on, and we'll see how that goes.
Something this leads into is an amazingly powerful thing about cryptocurrency is specifically solving this problem. So you look at Ethereum, where all of the, someone like a Hayden of Uniswap is effectively an employee of Ethereum without being an employee, right? They didn't have to vet him, and he didn't have to agree to some comp package. So that's kind of the strength, right, of this open source decentralized world, that you kind of empower everyone around the world to be your employee, and you pitch the vision, the message, the opportunity set, and then you don't need to find and vet everyone, right? You just have people all around
Hmm.
the world who choose to build on your platform. And I actually think it's funny, like with the whole ICO craze, and Bitcoiners in particular will be like, oh, why does that? Actually, I'll phrase it this way. So one of the most frustrating questions to me, because it's so stupid, is why does that need a token? And the argument is basically, if this business model or either from a technical or game theory project doesn't need a token, it shouldn't have one. And I would argue the opposite bias should be at play, which is everything is driven by incentives. And like crypto is based on this, right? Whole proof of work, everything is based on that. And so for crypto people to not get that is weird to me. But basically, So my point is, even if a project doesn't, it's a little bit like asking, why does a company need equity? Does Facebook need equity to be Facebook? Well, not for the product, but of course it
Hmm.
needs, like Facebook wouldn't
Hmm.
exist if
Right.
there wasn't equity, right? Like
Right.
people need to be incentivized. That's what, so I think one of the reasons development on Bitcoin has been so slow in terms of dApps, let's say, like higher layer, I'm not talking about the protocol itself, is this aversion to allowing there to be incentives for people to build things and be rewarded for that. The idea is basically you're supposed to just be a Bitcoin whale and therefore be incentivized to support, but that doesn't work, as we see, and it's frankly pretty obvious. And so, yeah, I think that's actually one of the most powerful things about cryptocurrency is that it provides this, it solves these exact problems we're having. It says, if you like this project, you can buy the token. As you get more involved and learn more about it, you start seeing ways you can add value and drive value, and you're incentivized, and either through your token ownership. And something that's actually great for you is that you have this massive right tail of equity that you can effectively share in different ways, in the sense that people can, so like in a traditional business, like someone joining Microsoft today, if they get 2 basis points of Microsoft stock, they know that's not going to 1000x. That's not going to
Hmm.
that's not going to change their lives, right?
Hmm.
Whereas for cryptocurrency projects, a relatively small number of tokens, if the team executes, if they really believe the vision, they can
Hmm.
be optimistic that it might be a very small dollar amount of value at current prices, but if everyone executes and you build what you say you're going to build, that could be a very, very rewarding outcome.
Yep. 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 Yeah, that's totally right. Yeah.
So what else? So aside from the hiring side, what else would be interesting to people to hear about your journey, kind of building Reserve, building the product, building the company, that might not be
Yeah.
obvious to?
Yeah. That's a good question. Well, we're at like about 125 people now, which is crazy. Um, we so we started off as a bunch of people in Silicon Valley, in the Bay Area, kind of thinking about this from an intellectual perspective, and pretty quickly ended up building out a team in Latin America as we decided to focus on that. And then when COVID hit, went remote, which interestingly, this isn't maybe news to people anymore, but like it was interesting for us that it got actually a lot easier to coordinate when everyone was remote compared to being half in an office and half remote. That's part of why I've kept us fully remote so
Mm.
far. We're still trying to figure out how to actually gather the team for parts of the year in order to get that human connection, because I think we're missing it right now. Um, but yeah, like what there's got to be interesting stuff to share about that journey. Um, well, okay, yeah. So one thing that's been really cool is that we still can't easily compete in, say, the US with the most sexy startups, because like nobody knows who we are, and when I explain what we're doing, most people don't get it. There's some fraction of people, like usually people who are like in the crypto sphere, who are scared of inflation, those type of people are excited about it. But honestly, like it's we offer competitive pay, and we make like I work very hard to get people from the US or Europe to join, and we do have people joining, but it's at a much slower rate than in Latin America, than in Venezuela and Argentina in particular, because there, this is like a big fucking deal. Like the product there, it's like I use it, my family uses it, my friends use it. When I have a new invite to give to someone, they're super excited. I like got to do that person a favor. Like it's that kind of thing. And so
Mm.
we every couple of weeks we have an all hands meeting, and once people have made it past their 3 month trials, we have them introduce themselves briefly. The introductions to become briefer and briefer as the team has grown, but it's
Mm.
like the stories that people tell are more and more frequently like, yeah, I just used the app and I really loved it, and this person who was already on the team told me about the position, and I was like, let's do it. And so like I basically, the lesson I'm taking from this, and I kind of thought this intellectually, but it's very different to like live it and feel it, is that if you're building something that, for people that they're really, really excited about, then those end up being the people who will join the team and who will work the hardest because they're super excited about what it means to them and to the people around them. And if you think about it, it also has like a social effect. It's like if you're building something that you can't explain to your friends and family, if they think it's kind of weird, or like with crypto, sometimes they think maybe it's a scam, like that can even be a negative thing. Versus if you're building a thing that like, everyone's hearing about and everyone's like, that's the shit, it's really motivating to be a part of that. And so that's definitely an effect that we've benefited from as the product has started to catch on in those countries. Um, and that's something that, in future things that I build, I'm definitely going to be like even more intentional about that than I was this time around. Um,
Mm.
and then, I mean, but like, let me talk about like some of the stuff that's hard too. Like, I think one of the things that's hardest is that as soon as we've started to have a significant number of users and volume and traffic, um, you stop getting to focus on the things that you want to build and the things that you want to add because you end up having to spend a lot of time on the things that are going wrong, the things that are breaking, the systems that you didn't really think about scale with. And so like actually, I wonder if I can just show this to you. Let me just show you something that kind of illustrates this really well. So this is our number of active users, and this is compared to the week before it so that we can keep track of the growth rate. So we're around 10% per week right now. And you can see it's like, what the hell happened here? What is that? And basically, it was that our customer support system, like we started to take off, and our customer support system totally couldn't handle it. So we basically had
Mm.
to like put up a waitlist wall and not allow anyone to join the app for this long period of time, which was so frustrating because it's like here it was, lots of people are really excited about what we're building. We really want to let everyone in as fast as possible, but we had to wait. You can see on the graph here, and it's like, sort of 2.5, 3 months of building and fixing these underlying systems before we can open up and start, growing in the fun, exciting way again. And like, as you can imagine, like, on the team internally, that's a high pressure situation because it's like, well, what's going wrong? Why can't we make this happen faster? And so we sort of constantly, like every week, are kind of having the conversation of like, hey, there's these problems. There's like for instance, the screen where you actually go to like send the dollars to somebody else, like you would on Cash App or Venmo. It still looks exactly the same as it did on our when we first launched it back at the end of 2020, because and it's kind of broken almost. There's like some parts about the search feature that don't work, and it kind of looks janky. There's like these like gray dots that are supposed to be like profile photos, and it's like, what the hell, like we haven't been able to fix that for like all these months, and it's like embarrassing. And there's a number of things about the app like that where like I feel embarrassed, but at the same time, we have at this point, I think we have 12 engineers and we have a product team, and they're like working super hard all the time. But it's just because they're fixing these crucial things, like the customer support
Right.
system is stopping growth. Obviously, you have to fix that and not worry about the fact that this one screen looks a little bit janky. And so it's something where like at the very beginning, when you're developing an app, you're like, we want it to be like this, and this is going to feel so cool, and blah blah blah, and you're sort of in that mindset of like, it's going to be perfect, and people are going to love it. And then once the thing starts to grow, like the reality sets in, and you just have to spend, a lot of time fighting fires and solving a lot of problems that people don't see. And so one thing that for me personally is kind of emotionally taxing about that is that like, the RSR holders out there are like, what's the progress? Like what's happening? What's the news this week? Like we want news, we want announcements. And I want to give them that. Like, it's very gratifying to be able to come and announce, some piece of progress that's gone well. But there's so many weeks where it's like we made progress, but we don't have anything to show for it. It's just like, the app is sort of not wigging out in this way that it was, and so we get to keep allowing people to join, which is kind of the thing that we end up ultimately having to be focused on. So there's like I've been puzzled because I want to transform the project to be a lot more transparent, starting like by now-ish, and but then like there's just a lot of the stuff that's happening that's like it's kind of boring, and it's kind of like it's almost upsetting that the problems exist in every instance, and so it doesn't really feel like exciting progress to like talk about having solved that. And I imagine this must be the same for like most startup people working on most products, but you don't really hear that part of the story publicly because there's nothing really interesting to say about it, and there's nothing really exciting or compelling to say about it. But like that's the reality of building something like this. At least it is for us right now. Is it's all driven by careful prioritization of all of these obstacles and constraints and issues and so on that we're just trying to knock down in the right order as fast as we can.
Yeah, I can certainly commiserate. Actually, I'll just give one sentence as my own example of that. In 2017, we launched, and crypto grew, and we grew faster than expected. I mean, it was like parabolic growth and for everything and everyone. And then we actually had to shut the firm down to new investment for almost a year while we basically tried to upgrade the boring basic stuff, right? We needed to hire a full-time accountant and just hiring, professionalizing the most boring things like back office and middle office. And so I can certainly commiserate. And I think whenever I talk to entrepreneurs, there's always like a big element of that. I often learn things even from a business strategy perspective that, like, looking at a business from 20,000 feet, you often don't see some of the hard pieces. And sometimes those hard pieces are actual moats, like they're really hard. So like this came up in a conversation. Someone who I'm a fan of is Taylor Monahan she originally created My Ether wallet and now runs My Crypto, which was in 2017 when I was like kind of really getting into Ethereum, that was inseparable from Ethereum for me. I know now most people use MetaMask, but still very popular product. It's just she was talking about her stuff as well as Etherscan, and the comment was that why something commonly gets said is like everyone complains about MetaMask constantly, and they still use it. Why aren't there 8 MetaMask alternatives? What is the hard that basically people look at MetaMask and say like, yeah, I get that it's hard to build, but like, why is it that hard? Or why is Etherscan that? And I didn't know. And what Taylor educated me on was that so like Ethereum constantly has mini chain forks and uncled and orphan blocks constantly that users basically never know about or affected by. But that stuff instantly breaks basically any database. So Etherscan has spent 5 years basically and as Ethereum has grown and innovated, integrated, and as DeFi has gotten more complex, basically a constant, incredible battle just to maintain the status quo. Just a huge amount of work has gone in to you being able to open Etherscan and seeing a correct balance, even in the midst of this mini chain fork you don't know is happening. Yeah. And that is like shockingly hard, and shocking amount of time and work has gone into that, such that the moat, the gap, if you were trying to do that from day one, is so vast. And that's something I didn't even know that was part of the product. I didn't even know that was like, so totally. Yeah, I do think I agree. It doesn't get talked about that much because it's not really sexy, right? People want to hear about the grand vision and what problems you're solving. But I find that interesting because sometimes it gives a hint as to why a problem hasn't been solved yet, or why there's only one incumbent, like a MetaMask, that people complain about, and yet they're the only team that's been able to do it, right? Like full credit to the MetaMask team. Like they built something that many people use, and even if they complain about it, obviously is offering huge value to a community. So yeah, that was not meant at all as a criticism of MetaMask or the team. Just so that's not kind of taken out of context.
Yeah, and I love that example about Etherscan too, because it's like I use it almost every day, and it does feel like just this simple utility. And I'm like, they keep on adding features, and I'm pretty excited about those. But still, yeah, I love that sort of pointing out that iceberg, because I totally wouldn't have thought of that, and it's exactly the sort of thing that we feel all the time.
So as we kind of near the end of our time, what else? Well, I mean, we can talk about anything, but anything about Reserve that you want to share with the community or other listeners? I mean, no pressure. We've covered a lot, but
there is one more thing to talk about, I guess, which is as we've been thinking about like how the world is going to receive this, how the world is going to receive stablecoins broadly. We've been, and as we've seen our own users and what it's meant for them, we've been concerned that like, what if governments are too caught up with the potential risks of people being able to send money peer to peer, essentially, that they push back because they don't recognize the benefits, like I talked about before. And a person who's high up on our team came up with a really good way to articulate this, which is essentially that, like to put it in context, the UN sort of regularly adds to the list of what they consider to be a human right. And like something that was added, I don't know exactly, a handful of years ago, was access to clean water. And the idea is like to live like a normal, dignified life, you need access to clean water. If you don't have that, that's like a major advantage. And what does it mean for it to be a right? It's like, well, we're sort of trying to decide as a global society, we're going to work hard to make sure that people have access to this, sort of no matter no matter what they're like as an individual person, even if they're like a really annoying, counterproductive individual person, it's a right. We're going to try to get you clean water anyway. And um, and so we started to think about like, well, access to stable currency is actually a necessity in today's world to live a dignified life. The two people who put in the same amount of effort, who are equally sort of cooperative in society, who are equally educated, if one has access to a stable currency and the other doesn't, then the one that doesn't is going to have like a huge disadvantage in having the same amount of sort of development of their life and life experience. And so we've decided to actually sort of be straightforward about this belief that we think access to stable currency actually should be considered a human right, sort of by the international community. And I don't know if we're going to be able to get like the UN to take that on and like officially enact that, but we might actually try. We're going to start by like collecting signatures and so on. But I think that that's like a really, it's a nice articulation of this idea of like why it is that you, as a regulator, like if a regulator ever watches this video or consumes our public material, like we think that even though there are dangers with cryptocurrency, with stablecoins, we think that access to stable currency really should be a human right, and so it's something that we really have to take seriously. And so that's our team is going to start organizing a campaign around that. And it's something that's bigger than just reserve. It's not access to reserve as a human right. And so we're going to try to involve others. But yeah, so that's something just to mention. And if people who watch this video are interested in being involved in that, it's going to be a very broad campaign that a lot of people are going to end up running little parts of all over the world. And we've already actually started to have meetings with dozens of people showing up to like take on leadership roles and do various things. So basically just contact us on any of our open channels, DM us on Twitter, etc., if you want to be a part of that, because that's something that's spinning up right about now.
Very cool. I love that line. Access to a stable currency is a human right. That's great.
Yeah.
Love it.
Yeah. Yeah.
Something I thought that this makes me think of that I thought about earlier when you were talking about kind of showing the value, not just showing it to politicians, but like Uber is a really interesting case study to me where they got banned in a lot of cities, but they had already shown their value to consumers in those cities. And the consumers then revolted, called like Mayor de Blasio's office or whoever, and said, I'm a single issue voter. I'm voting you out of office if you take away my Uber. And that was a much easier fight than the one you're up against, in the sense that it was basically Uber against, call it, the taxi cartel. And the taxi cartel was powerful and lobbied well, but not that powerful. Whereas in your case, the cartel is kind of banking and central banking and just a much more powerful and entrenched set of interests. But still, it seems like you guys are making great progress among showing that value to locals in Venezuela, Colombia, and other places in LATAM. So yeah, I mean, it reminds me of Satoshi's line in 2010, where he said, he suggested that WikiLeaks shouldn't accept Bitcoin because it wasn't yet ready for prime time. And I don't know if Satoshi ever literally said this, but he certainly suggested the framing that basically the way Bitcoin wins is sneaking up on the world and kind of showing its value first and getting enough people participating and being stakeholders before entrenched interests realize just how big of a threat it is. And I kind of hope that crypto has gotten to that stage in the Western world that most pensions in the country have indirect or direct crypto exposure today. Even if they don't directly own Bitcoin, they're invested in A16Z or Paradigm. And so at this point, if the US government said you can't legally own crypto, they're literally, it's something like indirectly, at least 85% of Americans own crypto, because through pensions, through endowments, really so you can imagine the head of the pension saying, hey, I don't know, I don't want to use, I'll use an example, but I don't know if CalPERS is one of the biggest pools of capital in the world. It's the California public pension system. And I don't know what they currently have, but I'm going to make up a number. I think it's like I won't make up a number because I'm going to embarrass myself, but it's a huge, huge number. And if the head of that pension was like, Congress, you will be hurting our teachers' savings if you crush this investment in our portfolio, that becomes very powerful. Like, who wants to hurt teachers and firemen and Teamsters? And so yeah, it's great that you guys are getting the real world traction.
We'll see if this format of having a conversation and broadcasting it is useful. Maybe that's a good way to scale these conversations and get more information out without spending too much time. But yeah, okay, cool. Well, thanks again, Ari. And I'll talk to you soon.
Bye.